the China situation has been perplexing to me. My position was always be careful working in China or investing in China. We're investing in Chinese companies because they could change the rules at any time and change the rules they have in the past year. We talked about, obviously, Ant Financial and Jack Ma going MIA, ByteDance's CEO and founder stepping down as CEO amid Chinese regulations and all the scrutiny. And then we have Didi last week being pulled from the App Store in an unprecedented penalty where you're not allowed to download Didi and the existing users can use it. And then on top of that, all the educational companies this week were told that they cannot operate as for-profit companies. And these companies have gone public in Hong Kong and in the West. And this has caused such an acute effect. SoftBank is clearing a bunch of its Uber position to cover their losses in Didi. And then there is the story of Larry Chen, who is a Chinese education entrepreneur. He was worth $15 billion in January. Now he's lost 99% of his net worth. According to Bloomberg, he founded Gaotu Techido or Techido, which is a Chinese online tutoring firm. As we know, education is huge in China. That company, Gaotu, peaked at $140 a share in January and has fallen to $3 a share. Big sordid story there. Tencent lost $100 billion in market cap in 3 days earlier this week as China cracked down on what they called a monopoly in music rights. So while we debate what happens with the monopolies here in the United States, China just literally told them, and here's the quote from the BBC article, the company and its affiliated businesses have been told that they can no longer engage in exclusive deals over music rights and must dissolve any existing agreements within 30 days. I mean, this would be like Biden just saying, the App Store is now open. You have to let other app stores in Apple, or, just coming down and saying to Amazon, you can't sell Amazon Basics anymore in 30 days. No more Amazon Basics at the site. What do you think the end game is here? Is this because China seems like they are very deliberate and they plan in centuries. What is happening here?
There's the short term and the long term. I think what's happening in the short term is that the same thing that we are talking about in the United States that Sachs is, very eloquently, basically, I think led most everybody in just really framing for a lot of people is this idea that, we have privatized free speech and we have put the distribution of information into the hands of 3 or 4 founder CEO oligarchs. That's also true in China. And when you look under the hood of the major internet companies, there's 4 or 5 guys that are in charge. And so I think that in the United States, politicians feel increasingly uneasy with those folks having power because it's applied indiscriminately. Trump gets banned, Trump may not get banned, this person gets distribution, this article is considered misinformation, that article is considered disinformation, this article is suppressed. It's a dangerous place to be. And in China, they were just like, enough's enough. So I think the short term, as it relates to the internet companies, was basically a realization that we are not going to allow any more devolution of power from the Chinese Communist Party to and into the hands of these internet entrepreneurs. So that was sort of like the...
So it's a move out of fear. They're scared they're going to lose their power base.
Not scared. I think they're just smart, and they were like, we're not going to allow this to happen. So they don't have to deal with Section 230 or any law like that. I think it was just a realization that we want them to understand who is boss. Right. And so there was a wave of resignations. There was now all of this market cap upheaval. And this is now where we get to sort of like the appetizer. And I think in the appetizer, what they're basically saying is we will control how money is made and who makes money. And I think that sets up the really difficult thing that I think happens, which is about the long term. So in this thing, what's happening right now is China very firmly telling everybody, we are firmly in control. There is no private market and there is no capital market without our approval. And that's a really big statement. And in fact, it was such a big statement that I think the Chinese security authorities then had like a conference call at Goldman Sachs, JP Morgan, all these folks were invited. And, the vice chairman, basically, his quote was something to the effect of, we promise that any more changes will at least let you know. Not, hey, there's nothing, nothing to see here, or there's nothing more to come. It's just more that as we decide new rules, we'll make sure that we give you guys enough warning. So it's very much firmly saying, we know exactly how money is made. We will decide who makes money in what way. And we're going to make sure that, all of this wealth creation happens under terms that we define. And I think that the setup for the long term. The long term in China is complicated. It is an enormous demographic time bomb. We've talked about this before. By the end of 2100, China's population will shrink from 1.1, 1.2 billion people down to about 700 million people, right? So they had very progressive, quote unquote, under their framework, laws of one-child policy to basically make it economically viable in the 60s and 70s. There was such a number of people. Those people were able to get great jobs in the, 80s and 90s and 2000s. And now they've realized, oh, wow, we made a huge miscalculation because now there is just not enough people. And so China's going to shrink. And I think that, honestly, I think Xi Jinping probably thinks the simplest way to solve this is to basically nationalize a lot of the economy over time. And so if I was a betting man, which I am general, but I'm not in China because I just don't understand the market. It's super complicated.
It's a rigged casino. It's a stupid place to bet.
I'm not going to say that. I just think that I don't know the market.
Well, I mean, if they change the rules of the game.
Well, hold on. Let me just finish what I was saying. I think that what we're starting to see is the beginning of nationalizations. And I think it's going to start in technology universe because those are the critical assets that the Chinese need to own for the future. So that's, in my opinion, what's happening. I think it's really important what's going on there. I don't know.
Sachs, when you look at this, we've been talking about, these two great competitors, America and China, and who's going to win. How does China win if this would seem, not having a vibrant entrepreneurial, socialist, communist hybrid? Is this the end of that experiment? And now it's just going to go all national? And then doesn't that make it easier for the West to win if China is just going to say, we're going to operate everything and they don't have a competition of ideas?
If they go that far. I think it's really interesting actually to compare what's happening in China with what's happening in the US, because on the surface, both countries are having this debate about whether big tech needs to be reined in, broken up, controlled. We're having that debate in the US, and obviously they're having some version of it in China, but it's a little bit like the civil rights debate, right? Where, we have our civil rights issue in the US, and, they have Shenzhen, they have the Uyghurs, it's like a whole order of magnitude different in terms of the way they react. And I think I would say there's three main differences here between the Chinese approach and the US approach. Number one, data privacy. We have a concept of separation between private companies and the data they control and the data that the US government can get its hands on. And the US government typically has to get a warrant and go through a court proceeding to get that data. What China is doing, they've now passed a law basically saying to all these companies, your data belongs to us. If we want it, we get it. They're taking operational control over the data, and they're going to use it, okay? That's a big difference. Number two, I think that China seems to be really worried about these big tech companies, not just in terms of whether they might engage in anti-competitive practices or consumer harm, sort of those conventional antitrust concepts in the United States, but they're concerned about these big tech moguls becoming power centers in China. And you saw this with Jack Ma, right? I mean, clearly the CCP had a problem with the way that Jack Ma had become a figure, that people rallied around him, they looked to him, they cared about what he had to say. And all of a sudden, yes, the Ant IPO was put on hold, but it was more than that, right? This was not just like, what the SEC would have done. All of a sudden, Jack Ma disappears. He goes into some sort of house arrest. He comes out 3 months later looking kind of emaciated. They are putting the fear of God in, these big tech moguls in a way that we would never do in the US. I mean, look, I don't want Tim Cook to engage in anti-competitive practices, but I don't want anything bad happening to Tim Cook. I don't think the guy should be under house arrest. If he wants to donate his money to political causes and speak out as a private citizen, he has every right to do that. And I'll defend his right to do that, no matter, how much I want, Apple to be reined in. That they don't have that separate concept in China. And I think the last thing that's going on here that's different is you saw China put the kibosh on. There were 34 IPOs of major Chinese tech companies that were scheduled to IPO in U.S. markets, and they have sort of shut that pipeline down. And what it appears they appear to be saying is that, we've talked about reshoring strategic industries back to the U.S., like pharmaceutical manufacturing. They seem to be saying we are going to reshore the IPO business. We do not want you, big Chinese tech companies, IPOing on American markets, on American exchanges. We are bringing that business back to China. And that is why I think you're seeing, giant ripple effects now, because, to Jamal's point about decoupling, we now, it looks like, are going to be decoupling our financial markets. And, that's why you're seeing, gigantic hits to the valuations.
Would you agree with me that the decoupling of these financial markets might be in the best interest of humanity and ultimately the decoupling of these two economies? If we don't see eye to eye about human rights and how to treat people, maybe it's good that we have a little more distance between the two markets. It's hard to know if engagement is the better process, but it doesn't seem like the Chinese Communist Party wants to have anything to do with democracy, anything to do with free markets. They want to control all the markets.
Yeah, you could see, but in a way, the product that the U.S. was exporting to China was our financial markets, and not in I think a good way, right? So I think the bad version of this is when China is able to buy up ownership in critical strategic centers in the U.S., and that affects people's speech rights over here. But this is not China buying up ownership in the U.S. This was China acting as a consumer of U.S. financial markets, and I think it's different, right? When we're selling products over there, that helps correct our trade balance, right? This is why I don't have a problem with Elon selling cars over in China. Is he's helping our trade balance, okay? But
sure.
But they're kind of canceling that. They're kind of saying we're going to reshore this industry. We want to have a domestic, stock market.
This is creating a mono economy, right? It's like it's going to blur the lines between public and private ownership, and it's going to basically make it one huge pot from which the Chinese government can take and put it back into as it deems fit for the broader success of China as a whole. Right. So if you're a CEO and they don't like you, you're going to resign. Right. If you're a company and they're worried about your propensity to be a little too frisky on your own, they'll rein you in. They'll either use cybersecurity law or something else. But the point is that I think that we shouldn't take this as free market regulators having their way. This isn't Lina Khan implementing, some laws. This is a top-down decision to nationalize large parts of the economy, starting with technology. And I know that for some people that may seem unfathomable, but if I'm a betting man, which I am, that's what I would bet on, that this is the beginning of an attempt to pull these companies in. At what David said is true. The Chinese government owns the data of Chinese companies. So at the end of the day, the Chinese government also owns the users and it also owns the revenues. It just hasn't told you yet.
Yeah. In a way, it's like the Chinese government, our government is trying to officiate the game fairly and create a really competitive, vibrant game. And I think what the Chinese government just said is the game's over. Like there is no game.
Yeah.
There's
a game. It just has.
What is the game?
The game is about control.
It has an Uber CEO. It made a bunch of CEOs, general managers in a large corporation that report through a reporting chain to one person, Xi Jinping.
But there's no more game in terms of building companies and investing in China. Like, how is the West ever going to trust? How is Goldman Sachs or Sequoia, launching a venture firm there, or retail investors or hedge fund investors? How are they ever going to want to participate in that market?
Look, for example, when you invest in China, right, or if you set up a fund, there are two pools of capital, right? There's the local renminbi denominated investment vehicles, and then there's the US dollar denominated investment vehicles. And they do that to segregate where the capital comes from. So it's not too difficult for the Chinese government to basically say, you know what, I'm going to actually make a constraint on dollar inflows so that, the renminbi denominated investment funds that are from Chinese investors into Chinese companies needs to be above a certain percentage, call it 2/3, right? Or call it 80%. They can make all these decisions because these are all just rules that are completely under their control. So I think that people who don't think this is going to happen are probably not looking at the setup. The setup seems to be directing itself towards that outcome. And by the way, it makes sense for what Xi Jinping wants to do from his perspective.
But that's not my question. My question is, why would Masayoshi-san or another entity ever invest in China again?
Because you look through the risks and you got completely enamored by the population and the TAM. But what I'm saying now is,
why would they do it again, or are they not going to do it?
No, but there are boundary conditions that would say that even before this, you would have had to reconsider. The population is shrinking. There's a different demand side pull that's happening, right? Older people need different kinds of services than younger people. There's not enough younger people. There's too many men. There's not enough women. So there's not enough couples. All of these demographic issues ultimately will get reflected in the economic reality, which is that smart investors would put money in China differently over time anyways. But I think that this is a bigger thing, as David said, which is if that's coming to pass, you want to control the pipes because you want to control how that information is presented to people, your citizens, so that they don't get pissed off. And then you might as well just own the economy, own the business anyway.
I see this as being amazing for American tech companies because I don't see who would ever want to be an entrepreneur, whoever has a great idea and wants to pursue it in China. Why would you do it?
No, I disagree with you. And the reason I disagree with you is...
And we don't have access to their markets anyway. What company has access to their market?
The difference is young, smart Chinese people for decades have been staying in China, in part because they could more relate culturally to Jack Ma than they could to Jack Dorsey. Mm-hmm. Okay, that just makes sense.
Sure.
And I understand that. And then the second is we, like the opposite of some other Western countries like Canada, closed our doors.
Why would the next Jack Ma start a company if they saw Jack Ma disappear? That's my question.
Because you know what? If you're coming from China and you can only make $1 billion versus $45 billion, I think you still take the shot.
Okay.
I think JCal is right in the sense, I don't think it's going to be like a binary decision where all of a sudden everyone just stops doing business in China, but they're going to be hedging their bets. I mean, if you were a Chinese billionaire looking at this landscape, your priority has got to be to get some wealth outside the country beyond the control of the CCP. You're going to be buying Bitcoin. You're going to be trying to get your money overseas. You have got to be very nervous about what's happening.
Buying homes in Palo Alto?
Absolutely. I mean, look, I think what President Xi is doing is fundamentally redefining the bargain between Chinese entrepreneurs and the government. And here was the original bargain, right? The great Chinese leader and economic reformer, Deng Xiaoping, basically set the bargain, 40 years ago. And basically the bargain was this: we're going to open up the economy and let you, the entrepreneur, get rich. We're going to keep all the political power. So as long as you don't mess with us politically, you can get as rich as you want. That was the original bargain. Now President Xi is saying there's a new bargain. There's a new boss in town. And here is the deal: that economic interests in China will be subordinate to national interests. Those national interests are defined by the CCP. And I run the CCP for life.
Exactly.
And that is what is happening. And that is a big change.
They just got layered. There is a new CEO that they report to.
This actually makes me very hopeful, actually. I think this is going to be like a spiraling down of their economy. I don't think it's going to spiral up.
I don't think so.
I mean, who's going to engage them? Who's going to invest in their economy?
Everybody. Guess what? Because if you want a shred of fucking lithium, if you want a battery, if you want nickel, if you want anything to happen, you need to work with China. They are incredibly smart and thoughtful. They have been strategic while we've been running around, complaining, crying, talking about the kindergarten soccer game. They were doing the hard work. They were doing it for decades. And until we find solutions that can work around them, we need to work with them.
I think they just throttled innovation. I think they just shot themselves in both feet. I think they're going to regret this decision.
I would come out in the middle and say they've just attached a discount rate that now every investor has to consider political risk when they invest in China, because the future is very uncertain. The bargain is getting changed. And if you're an investor, you now have to taking some huge political risk that you
I agree with David. I think that's a better way. I would refine what I'm saying by saying it's a distribution of risk where it's closer to Russia now than it is to the United States.
Yeah. And then I think there's literally an act called the Maginsky Act. What is the act that Bill Broder's lawyer, Maginsky?
Oh, yes.
Because basically in Russia, they were just killing people and taking their businesses. I mean, this feels like the equivalent in China to me.
Magnitsky.
Yeah. I mean, that was Bill Broder's lawyer who was tortured to death. And I just don't see anybody wanting to invest there anymore. And this does make the Bitcoin, in hindsight, it does look like they shut down Bitcoin a couple of months before making these actions. So to your point, David, they probably anticipated that people would start shipping their money out using Bitcoin. And so they banned Bitcoin. And now they're banning CEOs from having too much power. That was probably a sequential event.
That would be very smart on their part,
Can't leave.
Very smart.